Okay, we are live and with Liz Reese here today. Thank you so much, Liz, for being here. I appreciate your time. We're going to change it up a little bit. We are not actually talking about real estate in a different location today. Right now, we're talking about buying in California. And Reese, I almost called you Reese. Liz,
Mhm.
you also do Utah. Is that correct?
Yeah. Yep. I'm also
You
licensed in
start
Utah.
you Yeah, perfect. So we'll primarily be talking about California today as I am a California realtor. So I just want to have you on to really talk about what options there are out there. I think there's a lot of options that people aren't aware of in the realm of buying a home and also selling a home. So let's dive first off into home buying in California. Some of the options that people may not know about as far as allowing more affordability to purchase a home and kind of some creative financing moves that we can make to allow people to buy a home in this market.
Yeah, for sure. I'm happy to be here. Happy to be a resource. Yeah.
So one of the first things that I think we should really dive into is, and a lot of people talk about this online, and some may be exposed to this already, but is the 2-1 buy down. So a lot of people are talking about it. Can you talk a little bit more about what that actually means?
Yeah. So that's a great question. A 2-1 buy down is where you take your interest rate and the seller can pay to lower that interest rate for 2 years, basically. The first year, they can buy it down 2%. And then the second year, they can buy it down 1%. And then the third year, it'll go back to that original percent that is, where the market is at, essentially. So, and what's happening is the seller is going to put, let's see, what's the best way to explain this? The 2-1 buy down, that lender, they still want their money. Like, this is what their rate is. We still want our money. But what's happening is the 2-1 buy down, the seller is paying part of the buyer's house payment for 2 years. So that's what the buy down cost is. And that buy down amount is essentially going into like an escrow bucket. And when the homeowner makes their house payment, let's just for easiness sake, let's say the house payment's $2,000 a month. The homeowner is going to pay $1,500 a month, and then the lender is going to take the $500 out of that bucket from the seller and make the payment. So the bank still gets their money. The home owner will get, or the home buyer will kind of get that little bit of a reprieve for a couple years, and then the seller, that's a great way for the seller to pitch in right now. And then interest rates they're inflated based off of fear. There is some like data that will show that the interest rates are high, on the not high, but they're on like a higher side. But then fear is making them be even higher. And so that indicates to us that the interest rates will come down once everybody kind of takes a little bit of a chill pill. When inflation comes down, interest rates come down. So the idea of the 2-1 buy down ultimately is that we're going to be able to refinance you into a lower rate before you even get to that third year. And then the cool thing is, with that bucket of money that you got in the beginning, whatever's left in it is going to apply towards just paying down the house a little bit more. So you don't lose the money, you just get to apply it to your payoff.
Okay.
That makes
And then
sense. And that's
what
a lot of
other it does. And someone might have to rewind and rewatch that part a little bit and of course talk to you for more in-depth
right.
conversation. But what other kinds of impact does this have on the seller, for example? Obviously, it's a credit, so this is going to come out of their bottom line. But are there any other items that may cause risk for the seller or complication to the transaction when it comes to this?
Um, I wouldn't say I wouldn't say there's risk to the seller. It does lower their net, what they get out of it in the end, right? They
Right.
they are they
Yeah.
are having to give this credit to the buyer. Um, Sorry about my dog, of course.
It's okay. It's life. Working from home life. It's fine.
Yes, yes, that's right. Um, The opportunity right now for the seller, I think, is that you can give this credit. Actually, this is a conversation I had with somebody, a seller recently, is you can give the credit and sell your house a little sooner. Or if you wait and have to lower your price again, you're going to lose out on that money anyway. So this is an opportunity, I think, for sellers right now to really get out of their houses. And if you're in a position where you need to, this is a great way to do it. And I think personally right now in this market, you can do a seller's credit for two different reasons, right? You can do it to help with this 2-1 buy down, or you can help to lower the interest rate, like to pay points. But the the savings that the buyers get by doing the 2-1 buy down is so much more impactful than just buying down the interest rate right now. And especially when we think about interest rates coming down in the future, if the seller spends $15,000 to pay points to buy down the rate, and then the rates come down in 6 months and you can refinance it, that's totally a waste of money. But if they do the
Right.
2-1 buy down, and then that $15,000 goes into that bucket and they refinance, the rest of what's in that bucket gets dumped down into the loan. And so it's, I think, all around. I mean, the seller either way is putting out 15,000, but I think it is more impactful for the buyers right now to do the 2-1 buy down.
And are you seeing a lot of those right now with clients?
Yeah, I would say every client, every purchase I have right now is doing a 2-1 buy down. And even like,
Gosh.
here's one that didn't start out this way, but it was a builder in Utah that they started building the house in January when rates were, half of what they were right now. Um, but getting into like August, September, when the house is actually not even going to be done for another week and a half about. And we got that builder to kind of go back on what their original contract was and do a 2-1 buy down and lower the purchase price because of how much had just changed in the environment. So,
Wow.
yeah.
That's something that's actually really exciting for me because I do have a lot of clients that buy new construction. And especially where we are, some of the build outs take 10 to 12 months. And sometimes that's a real fear, right? Or not sometimes, it's always a real fear because a lot of these people are selling something to buy something. And if their new construction that they locked in 10 months ago now is significantly lower in value, that can be a huge issue. So
Or the
that's
interest
really
rate
good to
doubled
hear.
and yeah, or the interest rate doubled and you can't qualify for the payment anymore.
Yeah.
That's
Or both.
or
I
both.
mean,
Yes.
really,
Yeah.
both. Yeah. And
Yeah.
that's just something that is really good to hear. I have not heard, and I need to talk to you about this more offline,
Yeah.
but I have not heard that idea of doing it for new construction. So I
Yeah.
love that. And I need to talk more about that because that's fantastic.
Yeah.
And what are so a lot of people may have heard of the loan limits going up as well for conventional loans. So, of course, it varies based on county, right?
Mhm.
But
Right.
there's been a significant increase on the loan limits, which is helping affordability in the sense of what your down payments are, right? So it
Right.
pushes you, for a lot of home buyers, it pushes you out of that jumbo space and gives you more options. Am I saying that correctly? I am
Yeah.
not a
Yeah.
lender, so
Yeah.
I'm just
No,
trying to
that's
make
totally
sure.
right. You did a great explanation of it. Yeah. So, and especially because for me, I'm in the Central Valley more, and you're in the Bay Area where there's a high balance loan, and out here in like Tracy and Stockton area, Modesto, we have like if you're above, of course the number has like left my brain right now, but if you were above a certain amount, you had to put 20% down. Well, that can be a lot of money, where if you went
Right.
20 miles west, all you had to have was 5% down. So it does make a big difference. But the cool thing when you're in an area, and this applies across the country because the conventional loan limit is the same across the whole country. So if you have
Yeah.
if you're in an area where housing is affordable, affordable, you can do, if you're a first-time home buyer, as little as 3% down and still have a conventional loan. If you're in a high balance area like Bay Area, Los Angeles, I know there's different parts throughout the country, but you can do your minimum payment if you don't do an FHA loan is 5%. So I do think, if I'm being totally honest, I think 5% is the sweet spot. I think that makes your mortgage insurance less by a substantial amount. That if you can squeeze to 5%, I think it makes a big difference on your payment. So that's my
Oh yeah. I mean,
hot lending tip.
especially at our prices. And I was just pulling it up. I actually am going to be posting this tomorrow. I don't know if you can see it, but this is your
Oh, yeah.
lovely slides that you sent to me. So thank you so much. But I'm looking, so Santa Clara County, which is the county that I primarily serve, is 1,089,000. So I mean,
Mm.
just under 1.1 are the new limits. And that's huge. And even though people think that prices are crazy, you can still get a home for under that price. So there are absolutely still options out there. And especially in today's market, I think it's great. So,
Yeah.
as far as opportunity for first time home buyers, especially because of that FHA, but for anyone really, it's just giving more of the options out there. So we talked about 2-1 buy down. We talked about the new loan limits. What other things would you say are great options for, could be first time home buyers, it could just be, someone that's looking to sell and then buy another home. What can you tell me about some other options?
Well, if you're in California, and I'm sure all the states offer something similar, we have something that's called Cal HFA, and that's a down payment assistance program. So this does have to do with first-time home buyers. You can't have been on title to a house in the last 3 years. So that means if you helped co-sign on your parents' house, you're not eligible. So that's something to keep in mind as people are helping their parents buy houses. I think that's important. But what Cal HFA does is it helps lend money for the down payment and for a portion of the closing costs. And then I think the opportunity right now, especially in this market where sellers are giving, they're helping pay for closing costs, they can help pay for some of the closing costs that happen with these down payment assistance programs. And I think, and I've heard in 2020, there's going to be something that is helping with 20% down. I mean,
In
I
2023?
2023, yeah. Like, don't totally quote me on it, but they ran out of money for their 2022 and they were doing 10% down. And next year, my rep said that they were going to do, there's something 20% down and coming. So that is income based. So that's the other thing about down payment assistance programs is they are typically a little bit lower income, which I think it's tricky when you're in these really high income areas. Like, gosh, if you make that much money, you can't afford a house kind of thing. So you run into those things sometimes, but it's worth having a conversation with a lender to figure out, will you qualify for these assistance programs? And they have really low down payments, or some of them have are not down payments, interest rates. So the down payment assistance is a really low rate. And then the closing cost assistance, I believe, is 0%. So you are borrowing money to get into a place, but it helps you get into it. And then you can start getting the equity, you're starting to accumulate equity. So
Right. And I mean, another thing that people may not realize is even if you're getting into a program where you're not putting 20% down, at a certain point, you can refi out of having the mortgage insurance, which is always
right.
going to be there pretty much if you put less than 20% down. So you have options. It's not forever that you have that tacked on. And refinancing and having enough, I think it's a balance of having enough equity in the home and being able to get that out where the 20% is built in, right?
Right. Yeah. Yeah, exactly. Yeah. I think that
Yeah.
people should not wait For you to save 20% to avoid mortgage insurance, you're going to get outpriced by how the equity builds and the cost of the house. So even though if it takes 7 years, let's just say you never refinance and you're in this loan with mortgage insurance for 7 years, if you calculate, if your mortgage insurance is $100 a month for 7 years versus it takes you 5 years to save up enough money for that 20% down payment, and now the house went up 100,000, like it's not gonna make sense to wait to buy just to avoid mortgage insurance because it's more affordable than you might think. So don't disqualify yourself. I think that's the thing I run into a lot is people are like, oh, I have student loan debt, or I've a car payment or too many credit cards. Like, don't disqualify yourself. Like, we could let us run the numbers and let's just see if it works. And
Right.
if it doesn't work now, it might work in 6 months, but like, let's make a plan because the time is going to pass anyway. So let's start
Right.
now for what's going to happen in 6 months instead of in 6 months. Like, okay, I'm ready. Like, all right, well, you got to wait 6 more months.
Yeah, and I think it's this common fear. I guess I would call it a fear, but people feel like they need to be fully ready and their ducks in a row before they talk to someone like you or someone like me, right? They're
Right.
scared. Financing is scary and they feel like I actually don't exactly know what it is that causes this fear, but it's like, no, I'm only going to talk to someone to figure out what my pre-approval would look like or what my affordability would look like when I'm ready to buy a house or once I found the house, right? And
Right.
it's like,
Which
no,
is
no,
worse.
no, no, don't do that. Yeah, it's
Yeah.
being able to, even if you don't get your credit pulled, going through the process with rough numbers is still a better idea than just blindly going to look at houses. As fun as that may sound, if you find a house that you think, oh my gosh, we could buy this one, and then you go back and talk to you, right, in
Mhm.
the realm of affordability and approval, and you
Right.
find out you're $100,000 off, that's just
Yeah.
dream crushing.
Right.
I
It's so
mean, you don't want to go
discouraging.
through that. Yeah,
It's
yeah.
very
So,
discouraging. Yeah. I talked to
and
somebody
I think,
yesterday. Oh, go ahead.
go ahead.
Oh,
I know.
well, I talked to somebody yesterday who, she told me she's not ready to have her credit pulled, but she told me what her income was. I asked her what her debts were, car payment, credit cards. What
Yeah.
is your monthly payment goal? And then and how much money do you have to put towards this whole thing? And so we figured out a purchase price range. And I told her, like, this is not a pre approval, but it at least will help you focus on a more narrow point so that I do
Yes.
think the law of attraction is real, but you've got to attract the right thing, the right number. And
Yes.
so I'm like, your purchase price range is 350 to 400. Set your I know I'm sure as an agent you have some kind of a follow up, right? Like they have a purchase price and you send them listing ideas like
Yes.
um,
Within their range. Yeah.
in their range, right? So set your range at this if whatever the website is or whatever. Don't shop above it because it's super discouraging and you go and see these $600,000 houses, but all you can afford is 400 and 400's fine, but it's not 600 and it's
Right.
discouraging. So, like, set that law of attraction into the like right number and space, and you will find it.
Right. And then setting up expectations, right? So if
Mm.
I was looking to buy a home in 6 months and I'm like, okay, I want to know what I could afford right now with the money that I'm saving currently. And then knowing that I have a raise or something happening in the future, let's say 6 months from now, my finances will be different. People can sit down and brainstorm with you and say, okay, how much, what if I made another $25,000? What does that look like? Right.
Right.
And
Yeah.
trying to figure out that map of success for home buying is so huge. And most people overlook that. And
Right.
most people overlook us for guidance on that
Mm.
prospect.
Yeah.
Right. So, well, yeah, I want to help you when you're ready to buy a house, but I also want to help you map that out. I mean, in for us as business people, we're business planning right now, right? So why aren't you life planning? Why aren't you home buying planning what
Yeah.
that looks like in the next 6 to 12 months and saying, okay, I actually only need to save $100 a week to get to the next level, or whatever that may look like. Of course,
Mhm.
that's very personal and dependent on someone's finances, but
Right.
just figuring it out together instead of just using an online mortgage calculator and thinking it's going to give you the
Right.
answers to everything, right?
Right.
I mean,
Yeah, and
we
hoping that
we
they
want to
get
see
there.
people succeed.
Yeah, absolutely.
Yeah,
Yeah. Well, and your income honestly is calculated differently from an underwriter standpoint than from your
yeah,
standpoint. So you may think like I make $10,000 a month and you probably do, but you're thinking it's commission or it's bonus or it's overtime or it's salary. And
right.
there's different ways that the underwriters calculate and count income. So you really need to talk to somebody who understands how they're going to look at your income to figure out like that's great that you're bringing in that much in your paycheck every month, but how the underwriter is going to look at it is very different. So,
Exactly, exactly. So let's talk a little bit about what you think is happening in the future. What's happening right now versus 6 months ago? So, how many loan applications? I mean, not the exact number, but what has been the drop from the peak of the market 8 to 10 months ago to now, to what you're seeing as potentially a pickup or drop off as we go into the new year?
yeah, so I mean, gosh, 8 months ago, what was that? Like April-ish? Certainly
So
like
April.
yeah, certainly there's applications coming in because they're a little nervous that rates are going up, but they're not as high then as they are now, you know? So things definitely it feels as from the lender standpoint, it's slowed down certainly because the refi market is different, right? If you're gonna
Yes.
take cash out of your house or refinance for a lower rate, that has definitely changed. Purchase-wise, I think on average, I believe we're kind of where we've always been. I mean, the last 2 years were like it was just mania, but otherwise, I think we're pretty on track, and I think that next year rates as we a good time to know that rates are coming down is if you hear about how inflation is coming down. They're very connected. And so when you hear inflation coming down, expect that the rates will come down. And when the rates come down, the sellers are going to stop giving credits for things because there's going to be more
Yep.
buyers and more competition that comes into the
Yeah.
market. So I think I don't know that this answers your question exactly, but I think that's the opportunity now as a
Yeah.
buyer, even though the rates are higher than they will be probably even 6 months from now, projectedly. If you can get into the house now, you're going to get a better deal on the house. You're very likely going to have sellers help somehow, even if it's not with a 2-1 buy down. It might be in a different way, but the sellers are
Yeah.
more willing to help right now. And then in the future, we can just refinance that debt. And a refinance is like a zillion times easier than a purchase because you already have the house. There's not all that like stress and anxiety and of like finding the right place and putting in the offers and like all that. Like, what am I doing? I don't know. Is this right?
Yeah.
All the
Well,
anxiety.
and the end result is you get more money back in your pocket when you refi, so it's always good.
Yeah, yeah, yeah. So and it's not as expensive to refinance as it is to purchase. So and there's a lot of strategy that we can do around refinancing and getting credit for closing costs from the lender. I mean, it's a whole other thing, but it's just not as stressful. So
Yeah,
that's what I would say. Like
absolutely.
if you can find the place that you want now, get the house now because in the future you just restructure the debt.
Completely.
Yeah.
And let's flip the script a little bit and talk a little more about sellers, because right now, I mean, of course, you're hearing all over the media like, "Oh, nobody wants to sell their houses because they can't make enough money." It's like, well, okay, unless you bought your house in the last 12 months, you're still having some positive equity, right?
Yeah.
The last 6 to 12 months, we're seeing some negative equity, and that is interesting territory. But we're not going to talk about that today. What we are talking about is what someone's option is when they are selling their home to buy something else. So I know we've spoken about reverse mortgages before. Can you tell everyone what that actually means?
So a reverse mortgage is for homeowners age 55 and up. Typically, well, not typically. There's two different types. I won't get in the weeds too much because it's a whole other conversation, really. But reverse mortgages they're for seniors. You can use reverse mortgage as a tool for purchase. So if you're wanting to sell your house, and they call it right sizing, so maybe getting into a one-story house or just a smaller square footage, 55 and up community kind of space, you can sell your house and use the money from that to apply to a new reverse mortgage without having to use all of the money that you get from the sale of that house. So that's kind of a strategy there. I think when it comes to selling right now, I think that obviously expectations are really important. I think the perspective of, just like interest rates were in the twos and that was like crazy town, like the way that the houses were selling so far above asking price with these ridiculous, like just crazy. And I'm sure it was in the Bay Area like it was out in the Valley, where it's like, how much over for that tract home? Like that's crazy.
Oh, yes.
Like it was just crazy. And so it's the expectation of like, okay, now we're back into like a regular, normal, this is how much people normally profit on in equity on their houses. So
Right. So can you tell a little bit? I know we don't want to get too deep into it, but what does a reverse mortgage actually mean?
right. So the reverse mortgage it's a FHA loan, and it allows the senior to essentially not have to make a house payment anymore. There's still a house payment due, but what the reverse mortgage does is it allows that house payment to be added to the loan balance each month. So it's really a blessing for seniors. I think that some seniors really need it financially. They've retired, they might only have Social Security income. When it comes to the reverse purchase space, um, a lot of seniors, that all the money they have is the equity in their house. And great, if
Mhm.
they can sell it, buy a new house with cash, okay, but then they're in the same financial position as they were with the other house. So the reverse
Right.
allows them to not have to put so much money into the new purchase, and maybe put the difference of that money into some kind of an investment account that can give them a monthly income as well. And they don't have a house payment. So that's really the key thing with the reverse is getting rid of that house payment. But I have had some seniors strategize around, in fact, we just closed one that his house was free and clear, and he wanted to buy some investment properties in Colorado. And so he did a reverse mortgage on his house here in Concord, I believe. And we got him a chunk of money that he can use to go and buy more property and get income from that. And he doesn't have a house payment still. So he hasn't changed
Oh,
his
that's
monthly,
huge.
yeah, he hasn't changed his monthly expenses. And he's able to take that equity because he's house rich, right? And buy some other properties that'll cash flow. It helps his whole estate, that like generational wealth. It's helping, this bigger picture of like building a real estate portfolio. And, his house payment, he still has a house payment. It's just adding to the balance every month instead of him having to make it. So that's the big reverse.
Yeah, that's incredible. And right now, I mean, you're hearing of this is a great time to build an investment portfolio. So being able to
Yeah.
take advantage of that a little bit, I think is incredible. And you said it's for 55 and over, is that correct?
So the FHA loans are 62 and up, and then there's private
Okay,
money that will go 55 and up. Yeah.
got it. Okay, so definitely an amazing opportunity
Right.
for the
Right.
older generation. That's amazing.
Yeah.
Okay, well, Liz, thank you so much. I really
Yeah.
appreciate it. Are there any other final words before we tell everybody where to find you?
Yeah. Let's just see. Wise words of wisdom. I think that I'm a big believer in the law of attraction, and you are going to find the right place for you, but you've got to know your numbers. And so if you can get your numbers, you're focused, I have all my clients, I tell them, follow me on Instagram at Lone Lady Liz. I do lending education on there. I want you to surround yourself with information that helps support your goals and remind you, like, don't go buy that new car. I know it's tempting, but don't do it. Make sure you're paying your bills. Like, surround yourself with the types of energy and environment that is going to support your goals. And like, let's make this happen for you. So,
Awesome. Well,
yeah.
thank you so much, Liz. I appreciate your time. For anyone watching right now, you will find Liz tagged in this video. And you said, what was your Instagram again? Let's drop it one more time.
Lone Lady Liz. So, because I do
Lone
loans.
Lady Liz.
Yeah, Lone Lady
Yeah.
Liz.
I think I knew you as Lone Lady Liz before I knew you in real life. So that's
Right.
fantastic. But thank you so much for your time. For anyone watching, if you want to get in contact with Liz and you don't know how, definitely let me know. If you want to see more content just like this, make sure you subscribe to this channel. Thank you so much, Liz. Stick around for a second, but I will see you guys later.